What if I told you billionaires don't just pay $0 in taxes, but the government actually pays them in the form of tax credits while they still make hundreds of millions of dollars a year? By the end of this video, you won't just know the secret hacks that billionaires like Elon Musk and Jeff Bezos use, you'll also be able to use these hacks to your advantage in your own life. And you don't have to be a billionaire or even a millionaire to do it. The scary part about these elite tax hacks is how few people take advantage of them. It's not only completely legal to do, but our tax laws actually encourage us to do this sort of behavior. While it might be a broken system, it's a system that you should be taking advantage of. And this is exactly how we do it. So I'm splitting this video into two parts. Part one, the secret tax hack that billionaires use, and part two, how you can take advantage of this same strategy in your own life. So if you're like me and want to become financially free at some point in your life, then hit the like button and let's begin. Billionaires like Elon Musk and Jeff Bezos are drastically wealthier than anyone else in America. It's hard to understand exactly how much wealthier billionaires are compared to everyday people, but if you were to graph America's wealth on a scale, if you wanted to include billionaires, then you wouldn't even be able to see the middle class. Buying a Tesla that might cost $100,000. For you and I, it might take us 10 years to save for, or we might be strapped with a 20-year car loan. For billionaires, it's like dropping a nickel out of your pocket. But there's one big problem with their wealth, is that they don't have it. In terms of cash in the bank, most of them have very little, if any, money in their own bank. Their wealth is mainly tied up in the shares of the companies that they started and in real estate and investments in other companies or the stock market. So if Jeff Bezos wanted to pay himself an extra $100 million, he would have to sell $100 million of Amazon shares in order to get that money. And if you know anything about the stock market, the CEO selling $100 million of shares all at once is gonna cause mass panic, a major sell-off, which will then crash his own wealth and his company's stock price. So that's not really an option. Instead of that, what entrepreneurs do is they approach banks and they ask the banks to give them a loan based on the investments that they have. So Jeff Bezos will put up his shares of Amazon or his real estate as collateral to the bank. Am I calling him Jeff now? Are we on a first name basis? On top of this, they also get their corporations to do the same thing with the amount of shares, real estate, or assets that their corporations own. Now, where billionaires differ between us normies is that billionaires will use this loan as a way to go and get more money. And they do that by investing in new companies, new real estate, or new businesses that they want to purchase, which will produce more cash flow and income for them. As a matter of fact, this is the exact strategy that Elon Musk is using in order to buy Twitter. Now, if these new investments are already making money, or if they do start to make money, they will have to pay tax on that income. However, all expenses related to that business opportunity are tax deductible. And that includes the interest that they pay on the loan that they received in order to buy that new investment. And most times this is enough to have them pay zero taxes and sometimes even receive tax credits back from the government. All because they started their new venture or investment with loaned money. Part two, how you can take advantage of this. Let's say you want to buy a cottage, a nice place on the water for you to kick back to with your friends and family, but you don't have the money to do it. What you could do is take out a loan based on an asset that you already own. That could be a house, a condo, an apartment, and this can come in the form of a home equity line of credit, or if your home has appreciated in value, you can do a refinance for your mortgage. Now, where most people go wrong is they take this new money, which is a loan, and they go out and buy a BMW with it, or they do renovations just to make their place a little bit nicer. But what you should be doing is using that money to buy a cash flow producing investment. With that in mind, let's turn this dream cottage of yours into a dream cottage of yours that you also use as a rental property through Airbnb. Now your cottage, instead of being a personal liability, is now a business asset and an investment. And as a business, you are now able to claim all of the expenses related to your rental property as a tax-deductible expense. That includes the gas, your internet, the water, the electricity, even the gas you put in your car in order to drive to your cottage. All of these are business expenses. Plus, even fun new toys like adding kayaks or canoes to your cottage to help increase the value on Airbnb are considered business expenses and tax deductible.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah. It's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
On top of that, your loan that you took out, all of the interest that you pay on that loan in order to buy this new investment is also tax deductible, all while you're still offsetting your costs by making money from renting out your property. And if you're gonna take away anything from this video, remember this one thing. Think like a business, not like a consumer. And repeat this process to grow your income streams and keep your costs as low as possible. And if you want to take this one step further, put your cottage into a corporation that you own. But that's a topic for another video, so make sure that you do not miss that next video. And a word of caution when you're starting off on this journey, know your numbers, and know your numbers inside out and backwards. Forecast a doubling of interest rates for your mortgage. Forecast losing 50% of your anticipated revenue through Airbnb. Look at comparable Airbnb rentals and see if your price is in that range. Remember, you're running a business here which is taking calculated risks, which means you need to do the calculation. You're not taking a shot in the dark. And doing this for your first time is going to be risky. You don't have that much experience, you don't have that many assets, and you don't have that many income streams to rely on. But as you do this process and repeat it more and more, the more income streams you get, the more diversified your wealth is going to be, the more assets you'll have, and the better off you'll be, the less riskier each subsequent income stream become. And one of the best ways to continue your journey to financial independence is by staying connected with those that are like-minded. So if what I've covered in this video is resonating with you, then give this video a watch over here and consider subscribing to Money with Mark to get more videos like this one and stay connected to exchange better ideas like this. And I'll see you in the next video. Peace out. That was a good one.